Test, test, test. Can't tell if I'm live or not. There we go. Okay. Hey, everybody. Sorry about that. My streaming software must have malfunctioned when it came to YouTube, because I was just talking for like a good 2 minutes, and then all of a sudden, boom, I couldn't see that I was actually sending a signal to my YouTube channel. So sorry about that. But okay, everybody. Again, Loki says hello. He wants to play. Yeah. Down. But there's a lot to talk about today. A lot of the stuff we need to be covering today is Jerome Powell, what he's been talking about. And then on top of that, just what's going on with Bitcoin. Because as you guys can see, I mean, guys, we're so close to a breakdown right now. We are so close to a breakdown to the point where you're going to see mass liquidations happening if we continue on this path right now. Probably bringing us back down in the short term, back down here to 21,347. Again, we're most likely headed back down here to 20,400. But honestly, I think we need to have worse news as far as the stock market's concerned in order to reach that level. And then we got to worry about what happens if we break down below this, okay? Now, hey, the Razor Rock. Hey, Alan Time. Hope you guys are all doing good. Casey and Nico. He said, yeah, exactly, yeah. So, on more interest rate hikes. I mean, guys, the way I look at it like this is, you guys know I was kind of weirded out last month when Jerome Powell was being more dovish during his Fed minute speech, right? And I was kind of confused because I was like, inflation, while it's going lower, it's the battle's not done. So why not just convince the market you're going to stay the course, right? He's kind of flipped back from being dovish to more hawkish now. And instead of being consistent the whole way through, he was giving mixed signals. And I think a lot of this past rally has been those mixed signals. Rally over the past month or so, okay? Really some of those moves that have kept us higher and really stopped us from actually falling back down, which I thought we were going to do. And that's fine. That's the way the market goes. So first of all, let's just kind of talk about Bitcoin here. We are close to a breakdown here on the daily chart. We're close to a death cross here as well. Those are not good signs for any market environment. So just be careful, because we're most likely at this point, I would say 80% likely to break down below this trend line here over the next few days, okay? Or over the next week or so. I don't want to time it down too much. If we go down here to the 4-hour chart, same thing here, looking for that support level. Kind of, this is a range. I kind of just want to go to the bottom of the range, 21,354 or so. I think actually down here is the low of February too. So yeah, mid-February. Yeah. So I would like to use that as a stronger level of support. If you guys are looking for some type of pivot point, I would say, I think we're already in that pivot point, if you ask me. Let's see. Yeah, we're already really in that accumulation zone where we usually have reversals. It just looks like right now the overall market does not want to keep on going up. So you might find that next support level really all the way down here. There's nothing really there. Maybe if we go back down here a little bit further. Yeah, this zone is where I'd be looking to buy if you wanted to have some type of reversal where the stock market's maybe still doing okay. This might be that zone right in here. Now, it's technically from about 22,128 all the way down here to 21,364. But, I'd be fine with buying anything in here, frankly. But I'd be a little bit more greedy to try to get something on the bottom. Or I'd want to be greedy personally. Now, 15-minute chart before we start hopping on to some other stuff here. Yeah, you guys can clearly see. Oops, let me get this. I always forget I have this little thing on. There we go. There we go. You can see bears are still attacking. We had talked about how the technicals were still bearish, even though everything was kind of moving more sideways here. But it really feels like the market wants to go up, guys. And I know that sounds so weird after everything I just said. It really does feel like the market wants to go up, but reality keeps on slapping the market in the face, if that makes sense. So far, we got slammed back down. A lot of buyers came right back in here. And if you guys want to see us continue the breakdown, we're going to have to close down below this over the next few hours. It looks like 6 hours now. The daily is what I'm most concerned about, and also the 4-hour chart. You can see how fast we got popped back up, so we did not break down on the 4-hour chart. And so far, we're continuing to hold on to this chart. But guys, I'm not the happiest about this right now from a bull perspective, okay? Now, something that I thought was pretty interesting here, which normally is bad news for the stock market, bad news for the crypto markets as well. If we go over here, this is the dollar index. Traditionally, when the market is going down, when the dollar index is going down, the market's doing a little bit better. We start to worry a little bit more when the dollar starts to come back up, okay? And you can see over here during January, you can see how much the dollar fell. Over here in February, where stuff started to slow back down a little bit more, stuff wasn't going up as much. It was kind of more of a picker's market. You can see that the dollar index was going back up. Well, today we managed to bounce off of the 20-day moving average pretty handily, and then we had an acceleration on that dollar index when Jerome Powell started to speak in front of Congress. If I were to hide these other moving averages, and let's say I turn this one to the daily, and let's say I go to the 15-minute chart, you can see that bounce right there. It might disappear as I kind of open this up a little bit, but you can see that bounce, and then you can see when Jerome Powell was really humming along talking about raising interest rates. So this bounce right here is going to be interesting to see how much further we can go across, because as we bounce off of this 20-day moving average here, let me move everything back to the way it was before. Take a look at this weekly chart here is on the dollar index. We managed to bounce off of the support level right over here around $101, but we've already broken above the 20-week moving average after getting rejected off of it once. We're heading back up to the 50-week moving average after getting rejected by it once as well. And so if we start breaking above this level, which is around this 105.66 level, I think there's a huge opportunity for us to kind of have a stronger move. And that might take us all the way back up here towards 107. If the dollar index starts going back up here, everybody, that's going to be a huge sign that Bitcoin is going down and the rest of the stock market is going to be having a little bit more of a bearish time through the end of the month, okay? Now, we got 3 days left. It looks like 6 hours until we actually close on this weekly chart. But we really don't want to break above this if you guys are in the bullish mindset. Like me, I probably say we're most likely going to be popping above this, especially as over the next, or this week or next week, especially as we go into the meeting in a couple weeks. Now we kind of know from this hearing today that Jerome Powell is most likely going to be raising rates a little bit more, and that's going to be much more bullish for the dollar, and you're probably going to see a lot of bond rates and everything like that probably going up. I don't know if I can pull up the bonds here. Bonds. Yeah, there we go. 1 month, 2 month, short-term bonds right here skyrocketing. And then the longer-term ones going down. More of that inverted yield that you guys probably hear about on the news. Everybody's thinking that, hey, instead of investing in stocks for the next 2 years, why don't I just get some bonds and I'll make like a 5-6% return? While, if I held Apple, I might be at a negative return for 2 years. You get what I'm saying? Or it's just a safer investment. All right, so you can see how bonds are definitely enjoying what Jerome Powell had to say. You can see like 5% right here. Like, hey, guys, buy a bond for 6 months and get automatic 5.2%. I mean, almost 5.3. 6-month bond? That's a really good deal. And I don't think people understand how good of a deal it is just to hold a bond right now. 6% every 6 months, or 5% every 6 months. That's a really, really good deal. So if for all those people on retirement, they're just probably loving the bond markets right now. The bonds are worth a lot. Now, going over here to the Dow Jones and stuff, let's go over here to the daily. You can see typical rejections after hitting levels of resistance. In this case, it's the 50 and the 20. Nothing to talk about here, really. We have that support level back down here around 32,635. We're kind of just having a reversal here. NASDAQ, same thing. Hit resistance, then we got rejected by it. SPY really just got rejected off of this 20-day moving average. We really tried to break out above that yesterday, didn't we? We just weren't able to do so. And everything's just heading back down to these support levels that we had talked about a little bit earlier. For the S&P, it's really the 200. For the NASDAQ, it's really the 250. And for the Dow Jones, it's really just a hard level here of 32,630. And you could probably also toss in this 200 daily moving average. But to be frank, we haven't really tested it out too much. Maybe like one day over here, and it didn't even work out when we did breakdown. I'd really say we're trying to keep above the 32,630 level over any moving averages over there. Maybe you could say the 50-week moving average. That'd be a better way to be looking at this if you ask me. And also we're getting rejected off of the 20-week moving average here as well, which is kind of interesting. But we've already broken down out of this upward trend. We're going more on a downward trend at this point. But we're just having slightly lower lows and lower highs here. So we're in a short-term downtrend, everybody. I'm not too concerned from a trading perspective. I'm, again, just waiting for some type of breakdown over the next week or so. I thought this breakdown would have happened last week, to be frank, but it seems like we needed Jerome Powell to come in here and just remind people, hey, I'm hawkish, even though I guess he was dovish earlier, so he's confusing people, confusing me as well. All right. let's go back over here to the 15-minute chart. We can kind of watch this. And if you guys have any questions, feel free to let loose. What do you call this? Is a pretty interesting day. Oh, before I start answering your questions and whatnot, you guys see that Apple and stuff has been heading downwards a little bit after hitting some levels of resistance. You're really seeing Apple kind of again, and a lot of these other larger market cap stocks, when they start hitting their resistance levels and they get rejected off of them, you're starting to see a lot of the crypto following along. So just one thing as well. Well, Amazon already kind of tanked a while ago from those poor earnings. But even AFCO is doing okay. Well, on the 4 hour, it's doing okay. That's interesting. It managed to break out. Bank of America. Guess, yeah, we're still following some breakdowns here. This is oil stocks here. CVS is not oil, but ConocoPhillips is. CXV, Chevron. Heading back down to support levels. Oh, Chevron support levels. Wow. Okay, DVN. There's not much stuff popping up right now. Meta seems to be doing okay. And I think what happened over the past few days as far as Meta and a few other companies out there, it looks like the government may be trying to pass some type of legislation pretty soon to ban TikTok, or at least use the threat of a ban for negotiation purposes, leverage during negotiations. But the theory here for the Facebooks, I think the Snapchat popped up yesterday, is if TikTok is banned in the United States because they take a lot of data off your phone, a lot of it, kind of being taken over to the Chinese. If that does happen, a lot of those users are probably going to have to move over to YouTube, and they're probably going to have to move over to like Instagram Reels or, maybe Snapchat, stuff like that. If TikTok gets banned, it's probably going to be all absorbed by Facebook and Google. I don't really know many people that use Snapchat as far as short form content, but I'm not really a Snapchat user. But there is that thing being talked about in the backgrounds of Congress now. And so people are really thinking like, hey, whoa, they may actually move ahead of this, which is kind of crazy because, there's a lot of people's economy. Like I hope a lot of people actually make a living off of TikTok now, because of all the exposure they have. There we go. That's right here. And hey, Casey, sorry, I got to move my mic, guys, so I can see what you guys are talking about here. Did I hear that Powell speech? Yeah, it wasn't too good. A roller coaster. Greetings, y'all. Hey, Far From Broke. And hey, El Parasito. Sorry, I was thinking of Elephant for a second when I first saw your name. What's up, my man? Hey, Mike, I tried to put SQQQ on the dailies. It went up, and I was hoping we would stay up, and then we tanked. I sold out of it. It's lost for the dailies, and the QQQ is now going down. Are you bullish on the market or bearish on the market? Because it's so confusing. I'm bearish on the market, but it's hard to time this stuff right now because a lot of what we're looking at as far as market movers is all news. So like here's a simple way of how I've been viewing the market over the past few days. Let me just get here's Bitcoin. We'll talk about Bitcoin and then like the Dow Jones, NASDAQ, and SPY. Okay, we'll start from scratch here to help you out. So as far as Bitcoin's concerned, you've been seeing that this trend has been slowing down, and we've been really unable to break out above this level of resistance up here since this August resistance. We tried for a few weeks and we just were not able to do the trick. Let me go over here to the weekly chart for you, Neil. All right. And then on top of that, since we were getting rejected, we also got rejected off of the 200 weekly moving average and the 50 weekly moving average. There was this, death cross here. Then you guys know how I feel about death crosses. I trust them enough to just say, hey, I don't want to be buying into a death cross. Even if for some reason, sometimes it does manage to go up. I don't it's not, the percentage is not high enough for me to ever want to take that chance buying into a death cross on top of buying into a resistance level that we have yet to crack, right? Now, I decided that I wasn't going to be buying anymore and I was just going to be waiting it out and waiting for another opportunity to kind of buy back in, okay? Now, as we go over here to the daily charts, we know that over the past couple weeks or so, we've had this trend line right here. And if we break down below this trend line, there's definitely going to be some bad moves coming along, yada, 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 breakdowns are bad. Right? Now, one of the things that's been kind of scary along with this death cross here is the indicator that I've been talking about more and more here, just as like the change of character tune. And let me see if I can pull this up so it actually just shows you the prices. There you go. Let's just pull this out here. This thing for the most part is about like 85, 80, maybe sometimes 90% accurate, depending on which asset you're using it on. And this thing has been very, very good to me so far in the last few trades that I've done. I have a partnership with Lux Algo where I managed to get you guys like a permanent 30% discount code since the 40% promotion ran away. But I've been becoming more friendly with the guys that work over there, and I have a few friends like Tom Crown over. He has a channel out there that's pretty big, and we've been talking about different ways to try to use this type of stuff because they got a really good system over there. But like this one right here, it's free. So I've been using this one, and I'd probably say if you haven't already, try to watch that video. But I think you already did about the what's it called, Smart Money Concepts tutorial, whatever it is on my channel. But this thing has been pretty accurate. Okay. As long as you follow it along with resistance levels and support levels, it's been pretty good to me. For example, over here, you can see that we had a sell signal in a resistance area. Oh, wow, it ended up working out pretty well. We had a buy signal down here away from resistance, and it worked out pretty well. We had a buy level right here close to resistance. That one did not work out very well. Don't buy into resistance. That makes sense. You got to put some common sense on this. Otherwise, if you follow every signal, you're going to make money technically, but you want to be able to kind of mitigate some of those false trades out there, right? Sell signal right here that worked out. Sell signal right here that did not work out. This one I was hoping would actually have a little bit better of a chance, but we kind of popped up here, and this signal right there messed it up. Usually signals like this are kind of more like this one where we can pop back up but come back down, but it didn't work if you followed this other one. But then, of course, we had the one before. We had the big move way down here. That was a beauty of a move. This thing has been working very well for me, and so when I saw that bearish signal, I got a little bit more worried here. Now, that's kind of why I was a little bit more bearish on Bitcoin from the Bitcoin chart alone, okay? Now, from the dollar index perspective, what started to happen here, we started to break back above over the last few weeks, back above the 50-day moving average and the 20-day moving average, leading to a golden cross, which is a very bullish thing for the index. For me, that signifies that, hey, if the dollar index is more bullish, the stock market and the crypto market is going to be more bearish. All right. So, and you can see so far, you see some nasty moves. And like we talked about a few minutes ago, you can see here in January, when we started to break down, January was awesome for the stock market. It was fantastic. I don't know if I feel weird saying awesome, but it was great for the stock market. Great for the stock market. Okay. And you can just see January really good. When February came around and we started to reverse, all of a sudden, all that big pump was like, yeah, now we got to start worrying about bonds. We just talked about bonds here a few minutes ago. Bonds are great right now if you guys don't want to actually hold any assets because you're afraid they're going to go down or whatever. All right, so that was another bearish sign right there. Now, we go over here to the dollar index. What's been going on over the past few months? Really, we've just been in this holding pattern after we broke down. So like all the indexes at this point, they've all managed to break down. If I were just to draw, I don't need to have the magnet on here, just draw a simple line, right? Breaking down, and usually when you break a trend line, it means either one of two things. We're breaking down and we're going to have like lower highs, or we're going to go more sideways here because that initial uptrend was broken and we need another opportunity to consolidate for that next move up or potentially a reversal on the way back down. Now, because this is kind of hard because I go against the grain here, I think a majority of people on YouTube and a majority of people like on TikTok and Twitter, like YouTube people or just people that talk about the market like I do, the majority of them are overall pretty darn bullish about what this year is going to entail for the economy and cryptocurrencies and, how much money people can make. I'm on the other end of that where I still think I'm not going to really be buying until we start hopping into a recession. And then I want to use my cash reserves to really go heavy into the crypto market. I still have a lot of cash reserves because we never really tanked the way I wanted us to. And I've been doing a lot of dollar cost averaging. I bought in bulk at like 20,000, 25,000, I believe, 17,000, 15,000. No, not 15,000, like 15,500 or something like that. Was that, or was it 16,000? Somewhere down there. I was a limit order that I had a long time ago. But basically, I wanted us to go down a little bit more because I am still the feeling that the economy is going to go into a recession and yada, yada, yada. Okay. Now, this will kind of help you understand what I'm talking about here. So far over the last few weeks, been kind of just going more sideways here. The Dow Jones sideways, cool. It doesn't really affect the crypto markets all too much, but it's just something to keep aware of, okay? We're trying not to break down, and you're seeing more of just, again, like all the moving averages right now are literally going sideways. That's how sideways this thing has been. 200 sideways, 50 sideways, 20 sideways with a little bit of a curl. Now, NASDAQ, same thing. Coming back down here after breaking down that trend, the lower highs are coming in. Only difference here is we were trying to break out above the, break down below the 200 and the 50-day moving averages. To me, the downtrend is still good enough. What's only concerning for me from a bearish perspective on this next upcoming week is you guys can see we're looking at a golden cross here between the 50 and the 200 daily moving averages, which we haven't really seen in like a long time, like since COVID, right? So that is going to be interesting to see how that all plays out, because that'd be a bullish move from an indicator perspective, right? So that's something that's concerning to me as somebody that wants the market to come back down. But maybe we'll have one more pump because of that afterwards. I'm not entirely sure. If anything, I think the NASDAQ might get moved back up here. But if the Federal Reserve comes out later on this month and says, hey, we're going to be doing 50 basis points instead of 25, or we're going to have another 25, another 50 later on this year, that could definitely cause us to just break down below this without any impunity. As far as the SPY, we've already had that golden cross, and it helped us out for maybe a few days as we tried to go more sideways. But guess what? We still ended up coming back down. So, and this was the first golden cross for the SPY in a long time as well. I want to make sure you guys understand that since the COVID. So, it's not like the golden cross is going to be like a 100% banger out there. But historically, it usually is a pretty good signal, okay? But again, since the economy is so rough, maybe it's not going to be that good signal that we kind of hope it to be. Because all of a sudden, if we have that golden cross, what happens if we start reversing and coming back down here? Not breaking up new lows like we did last October. But if we start coming down as far as the price action just over time, well, then you have the 20 death cross on the 50 and the 200. Then you also have the 50 death cross on the 200. And all of a sudden, you're looking at more death crosses, which is a horrible thing to look at, which kind of goes back to my thesis. But again, usually golden crosses do have some type of move here. Now, along with the economy, people having to save up more because they're not spending as much because they're afraid of the economy is going to go into another recession here. Orders going down, bearish economic news basically with higher inflation. Inflation is not cooling down as fast as the stock market would want, yada, yada, yada. That's why I'm overall just pretty bearish at this point. What's made it tough, I would say, over the past few days, let's go over here to the 4-hour chart on Bitcoin. You can see we've done a whole bunch of nothing but going sideways. Like, trading in this environment is very, very hard. Trading in the NASDAQ in this environment where all we're doing on the 4-hour chart is pretty much just going sideways, it's very, very difficult. It's much easier to trade when we're just going in a nice little uptrend like this, and you're just waiting for either a breakdown or you're waiting for that next test so you guys can buy again. In this scenario, it looks like we were bouncing off of the 20-day moving average quite a bit. And then when we finally gave up with that 20-day moving average, we started to go more sideways, the lower highs, and so far the lower lows, of course, right? So at this point, I'm much more bearish. But again, I've been saying I've been bearish. Like, this whole past rally was really irrational in my mind. It still happened, so you can still trade it and make money. But don't get caught up in the FOMO out there, especially, again, when Bitcoin itself is at huge resistance levels, or it was at huge resistance levels. I'm thinking more of puts in the stock market right now and shorting of the crypto market at this point. There we go. Because I don't trust everything that's been kind of said on the news. Remember, in January, in a way, media itself is kind of a lagging indicator. It has to be, because they're reporting on something that, it's usually happened in the past. All of January, CNBC was pumping up the market like never before. Oh my gosh, we're really not going to have a recession. We're going to go into a soft landing. Everything's going to be good. Inflation's going to be coming down. And then all of a sudden, now they're talking about, oh my God, maybe we're going to be going back into a recession. Oh my God, what's going to be happening here? Oh my God, the bond markets are going up like sky high. And I think people buy into that quite a bit. CNBC is good in my opinion. I like CNBC. I like Fox Business. I like Bloomberg. But for me, Bloomberg is if I want to learn about China, I go to Bloomberg. Because everybody that works at Bloomberg is from China, all really knowledgeable about the subject. CNBC, I don't really care for any of the hosts, to be frank. But I do like to hear the people that they have on their show, and I want to be able to hear what their thoughts are on the economy and what they're looking for in certain things, right? And then as far as Fox Business, I like some of their hosts, but sometimes they talk more about social issues when I don't care about social issues, right? I care about the economy. So, you go to each network and kind of get a flavor, and I would use a lot of those, what I just said, to kind of gauge where you think about the market. But for me, Usually I spend most of my days watching CNBC or Fox Business. I don't usually watch Bloomberg all too much, but Bloomberg is really good when you do need to learn something about China. Like right now, the worry about China here is that they're going to start like flooding the market for the demand of oil. So they're going to start needing more oil now. And so now all of a sudden there's an opportunity here for oil investors because oil investors think that maybe we might break out of that range that we'd been talking about. I learned about that while looking at Bloomberg. Okay. I'm not really a fan of like, the channel all too much. I'm not a fan, but I don't watch it all too much because I don't really need to watch it. Like if I go over here to the watch list, oil. Okay. So you can see we've been in this trading range for a while. Now this is a weekly chart. In this trading range, you're getting rejected off of the 20-week moving average again. There's a thought here that perhaps we're going to be able to break out above this range here over the next few weeks. Like, I think it's like next 2 to 3 months, I would say. So that, we're still kind of in the middle of it. But if we do, that's going to mean higher gas prices, therefore more inflation. That could also be bad, and that could cause rates to go up even higher than anticipated. And so we're just seeing a lot of uncertainty, and uncertainty to me is always bearish, right? So that's how to explain it in kind of totality here, in a non-coherent totality, but a totality nonetheless. But yeah, so if we start seeing this again, it could be kind of scary here. And of course, while the 200 is kind of casually moving up here, we really don't want to see oil prices start to skyrocket all too much, because if oil prices start to go back up, you're going to see the 20-week moving average slowly go up just in time for the summer to start. And if we have a golden cross going into the summer, you can see oil getting back up to like $95 a barrel, because the demand for oil is always much greater during the summer times, right? More people on the roads, more people taking their kids to college. You guys get it. More people traveling just in general. All right, let's go back over here to the main one. But yeah, I am not a fan of the market overall right now. I'm just not a fan of it. But it's hard to say that exactly, when the market keeps on trying to break out, have these reversals after reversals and reversals. It's hard, right? It's very, very hard to try to stick with that. But as far as the SPY and the triple Qs and stuff like that, I'm bearish on it all. I mean, anything that's supposed to be going up, I'm bearish on it. Let's see. And hey, Alex, happy to see you back, man. Dude, I almost didn't go live today. I had to do so much work in the morning. I actually got my, I had to make my face look pretty today by basically just washing my face. But I took Loki out for a walk today, so he was really enjoying it. So my puts too early. Hey, I've got an edge. What do you call it? It's like here, guys. We can go through the SPY puts for the day. It's definitely been interesting. Funny enough, I made a video for you guys yesterday. It's on the second channel, and it was basically using the indicator, the breakout finder indicator. And I made a video on it, and I was basically using it to go over Apple. If I can find it right here. And I was like, watch what happens tomorrow as when we see Apple. How do I find that? Is it not going to show up? No, it's not going to show up. Okay, you see, there's like a breakout right here. There's a breakout indicator that hit Apple when I was doing the tutorial yesterday, and I was like, watch what happens with Apple. It's going to go down tomorrow. But I don't know why it's not showing up here. Minimum test. No, everything's the same. Oh, shucks, that sucks. I wanted to show it to you guys now, but yeah, everything pretty much hit levels of resistance at this point. I just think, as far as the SPY and the overall market, I don't think people were anticipating Jerome Powell and his opening remarks, right? I think that kind of sped up the process here of this like little bit of a downtrend that we're seeing. But again, we had a really good day yesterday. It's okay, but as long as you made a profit, you should be happy. You might even find another opportunity to enter a position, like perhaps right now, as far as the SPY is concerned, you see this downtrend right there. Maybe if we make our way back up here and we don't break out, you're looking at maybe another change of character or something on the downward side, and maybe you enter a position in there. Let me see. Well, that Silson, I guess, came this morning, so yeah. But maybe you come back up to resistance levels and maybe you try to strike it again. A day trade, of course, a day trade. But on the 4-hour charts here, look at this. 4-hour charts, still getting more sideways here, a little bit more rocky. Looking at more of a death cross, though, between the 50 and the 200 coming up, so that's not going to be a good sign. Let's hop on the 5-minute chart here. The fact we managed to come back up after that breakout, there are still so many people that want to buy right now. Still so many people that want to buy, which is kind of crazy, but I mean, the market's there, I guess, so you can buy as much as you want. The market is a roller coaster. That's the problem. Oh, yeah, that it is. Well, again, you got to be careful on days like this where Jerome Powell is speaking. And then on top of that, you know, there's a lot of uncertainty out there, but I think it's just mostly just Jerome Powell speaking. He's getting grilled on Congress right now on Capitol Hill. I haven't been able to watch as much of the hearing as I wanted to, but I tried to watch a little bit of it at the beginning, and oh my God, it was extremely boring. Like Sherrod Brown of Ohio, like was putting me to snores. Tim Scott, he was okay, but still pretty boring. I don't know. It looks like things get a little bit more heated throughout the next few people that kind of ask him questions. End phase is volatile. I can't really tell whether to stay with my put or take my profit. Let's see, end phase. So end phase energy right now is at the 50-day moving average. It would probably most likely get rejected here. And I think what's probably, hold on. So this is semiconductor. Let me double check to see what they do. So, okay. All right. If this was in the oil market, you'd be having a blockbuster day because oil is all tanking right now after something. I don't know what. I haven't had a chance to check out the news. But from here, it looks like it's at the 50-day moving average. Traditionally, that's where it would be most likely getting rejected and start coming back down. As far as the put here, the 4-hour chart still curling back down. You got those lower highs here working in your favor. Hasn't broken in yet, but it is in a small consolidation pattern over here. Huh. I wonder. I guess for me, my stop loss would probably be back up here, like 228 or so. I'd let it kind of ride personally to see what would happen. Oh man, I'm still sick, guys. So sorry about my nose getting stuffy. Chugging water though. All right, 15-minute chart. Come back down bit by bit. I guess I'd be more bearish throughout the day, personally. More bearish. On the 15-minute, you did have this weird breakup, but that's not how I'd be trading this at all right now. I'd be looking just more at a zone. Maybe I could actually add a rectangle on here for you. Let's let me work this one. There you go. How do I want to do this? Yeah, something more like that. I'd probably hold it, but man, yeah, you can tell this thing has been a little bit of a bumpy ride. It's had a much better recovery than I think a lot of the other assets out there. Like if we go over here to what this is, NASDAQ. NASDAQ's not nearly as comfortable as end phase right now. I would say, if you see the NASDAQ start breaking down below maybe 12,194 or so, I think that's a much more confident move here. But as I look at the 15-minute chart, you're most likely going to have some death crosses here throughout the end of the day. So you might even see a tank, I would say, on a lot of these assets towards the last hour and a half of the trading day here. But hopefully the Jerome Powell effect doesn't wear off sometime before then. I think that's the only thing I'd be worried about here. There you go. You could even see stuff like Bitcoin still trying to hold some semblance of support right now. The other day I did profit on Adobe, and of course it goes up another $10, $12. Dude, this market is definitely definitely a roller coaster, like you guys are saying. I'd just be playing it safe. And if you guys are making money, you guys are doing it right. As long as you guys are making some type of profit at the end of the day, you guys are doing the right thing. I know it may seem like you leave some money on the table. That's probably honestly because you've been learning from me. And as you guys know, I leave a lot of money on the table. But I'm always just happy enough to have money to, to take away, right? So I would say try to scale out a little bit more and see if that helps you out. That's usually what I do if I'm trying to better myself as far as holding for a longer period of time. But in this market, I've kind of just like totally tossed that out the window. I'm like, hey, as long as I'm making money, I'm happy. Because I've talked to some friends of mine who have worked on Wall Street in the past, and they've like retired from Wall Street and they just kind of manage their own finances at home. And we've all been just talking about how this has just been the wildest of markets because everything that like we've all been taught as far as like how to trade, it's all been just getting smacked around because of the Fed, interest rate hikes, and inflation. And so like good news is bad news is good news. And how do you fit that all in together? It's very, very confusing things because, let's say like January, the jobs numbers were very strong. Well, you would think that that's good news. In reality, it was not good news because that means the Federal Reserve is probably going to have to keep rates higher for longer because the economy is still too hot. Well, and if the economy is still too hot with higher rates, that also means, guess what? That we're more likely to go into a recession if rates are continue to be higher than they might otherwise be. So good news is bad news, bad news is good news. And, it's the weirdest thing because if we have bad news, that gives a chance that, hey, maybe the Fed will pivot. Maybe they'll stop raising interest rates as much. Maybe we'll have even rate cuts at the end of the year. It's totally whacked. And for somebody like me, remember, I'm 28 years old. This is my first bear market. I was, Dow Jones. Back in 2008, I think I was in middle school. Back in 02, I was like, 01, 02, I was like 7 or 8 years old. I haven't really been along many of these markets. Like, how old was I in 2008? Right. My date of birth, 29th. September 1994. Let's just go to 2008. I was 13 years old. Okay. So I have no idea. I'm not some type of expert in bear markets, which is why I'm like just taking my money and running every single opportunity I can because I'm not used to seeing stuff like this where we're going down and all of a sudden we have a massive breakout for no reason pretty much as far as I'm concerned because I'm all for fundamentals and technicals. This is all about preparing for fundamentals in the future based off of what the Federal Reserve may do, right? I don't like doing trading that way. So I've kind of just capitulated that to myself and like, hey, just make your money. Don't worry about the huge moves right now. Just keep on making money. And so far it's been working. And again, I've made some good calls throughout this entire bear market, especially when it comes to crypto, because I like crypto a lot. But I'm usually in the minority about them. Remember, some of the larger YouTubers out there were calling this the end of the bear market back over here in 2022. And then all of a sudden I was like, guys, be careful of the death cross that's going to be coming our way right here, because historically that's a really, really nasty sign. And then what happened? We broke above the 20-day moving average. One of the largest YouTubers out there for crypto, Benjamin, a really good guy. He was saying that we're now back in a bull market because we had gotten back above the bull market support band that he has, which is a crazy cool tool. But then what happened? We spent like 1 week up here and then we just started to tank, right? And then exchanges started to fall like flies. It gets pretty crazy. And then remember, before we started hitting crazy inflation, I thought we might just do the normal Bitcoin thing here and just ride across the 200 daily moving average like we always did. Around that 200 daily moving average, we typically find a market bottom. Not this time, right? So there's been a lot of craziness in this past few weeks, or excuse me, past few quarters. Hey, Alex, it pays to be bearish, I would say, at this point. Oh, Loki's over here. Uh, he's trying to pull me with his paw. Yeah, no worries, Alex. Happy to help you out. Can I have your opinion on VTS stock and JEPQ ETF? Let's see. Yeah, one second. Let's see. Yeah, no worries, Daily Bird, dude. It'll take some time, man. It's definitely harder right now at these points in time, especially when the market's going more sideways. It makes everything a lot harder. Um, VTS, energy. Okay, there's not much to go on here since it looks like it just IPO'd or just came out. It looks like it's holding it very well. I would say for this one, Monica, the technicals aren't really going to help you out here as far as what I can tell you. I think we should take more of a fundamental look at this one. So let's go over here. You said VTS, I'm sure, right? VTS, okay. Just making sure. Okay. A 10% dividend, that's pretty nice. A market cap of 500 million, that's pretty nice as well. That means that you could put this in a long-term portfolio here and hope it does some good. Now, what do they do here? Oil and gas, that's good. I do like my oil and gas. I would say this would be a hold for me without the stock, the price action here. I'd probably want to be in some oil plays until at least the summertime, but maybe start scaling out a little bit more. Let's see. Velocity of capital compounding is focused on returning capital to stockholders through owning financial interests on non-operating and oil and gas wells drilled by leading U.S. operators. Okay. As a non-operator. Okay. I see what this is. Okay. So they make investments. They get the shareholders back. Okay. We take a different perspective to oil and gas investing by leveraging data, technology, and experience to execute a return-driven approach. Everybody does that. We focus on long-term value through active management or asset base. We're data-driven. Okay. Diversifying. Okay. Established in 2013 with original equity investment of 50 million, which was increased to 350 million. Okay. Completed spinoff from Jefferies Financial Group, the spinoff and closed acquisition of VO on January 3rd. Okay, so they're a spinoff company. That's why they're so trusted coming out of the gates. Declared a quarterly cash dividend of 50 cents per common share to be paid at the first quarter of 2023. 50 cents per share isn't too bad, especially when the price is only about 20 bucks. Yeah, back here in January, it was only 15 bucks. Every 15 bucks you invest, you get 50 cents back on a dividend. Pretty good, Monica. Oh, there we go. Total revenue for 2022 was 300 million, increase of 55% over 2021. That's some big growth. Bethesda realized oil and natural gas prices before hedging were $96.16 per barrel. Okay. So they hedge against oil and natural gas at the same time, just in case the price does go down. That's nice to see. It's safer. Okay, here. 2023 annual guidance. Vitesse, I think that's how you pronounce it, anticipates production of two stream bases to be in range of 10,800 to 11,800 barrels per day in 2023, an increase of approximately 9% at midpoint from 22 levels. Vitesse expects a total capital spending in the range of 60 to 80 million for 2023. That's not bad, especially for a market cap that small. Oil is a percentage of annual production. Total capital expenditures in millions, $60 to $80. Okay, that's not bad. Oil, natural gas. Okay. Expenses. Commodity hedging, that's fine. They lost money because, of course, they went up. Let's see. A lot of money from oil, some money from natural gas, not nearly as much money as oil, but that's fine. Expenses 140. Okay, that makes it. I would say this is a pretty solid company here, Monica. I mean, I would actually look to invest in this, especially with that good dividend they had. What is that, like 10%? Yeah, I'd. Oh, yeah, my head might be blocking it. I'd be more than happy to trade something like this. There's no options available, but it is shortable. I don't know who wants to short this one though. Yeah, only 1%, 2%. I'd be happy with this one. I'd be happy, and anybody like already selling off assets or something now. Okay, yeah, I'd be happy to own this one. Now, as far as the second one, JEPQ, equity premium. This one seems to be from about a year ago. This one hasn't been performing too well. There's an opportunity for a golden cross, it looks like on the weekly charts, but this one does. It looks like it's just kind of following this natural downtrend here. Let me see what's happening right here, though. Let's go to JEPQ. Dividend of like almost 12%. That's pretty solid. I need to see exactly what this does. Seeks to deliver monthly distributable income and equity market exposure with less volatility. Portfolio managers with over 6 years. Okay, yeah. Defensive equity portfolio employs at time. Okay, what? Those are the portfolio managers. What's in it? Market returns haven't been the best so far, as like if you just like you buy the asset quarterly. Cumulative calendar year, it's been 2021 it was okay. 2022 of course didn't look too good. That's not bad, because that's just some of this is just not even the ETF. The fee of 35, only 0.35%. That's not bad. Last year, yeah, over the last year, that's where it's really struggled. Okay, but what's inside of it? Okay, here it is. So it owns Progressive, ABBV, MasterCard, Hershey, Visa, Coca-Cola, Train Technologies, PepsiCo, Travelers, Bristol Myers. Oh, this is top 10 holdings. Oh, they're really going to do me like this. Oh my gosh. Okay, here we go. I don't even know if you guys can see this. I hate when they do stuff like this. Okay, so you got Progressive. Okay, shares per strike price, market value, number of assets. So it's a whole bunch of really small pieces. So this is a very diversified portfolio right now. So MasterCard, Hershey, Visa, Coca-Cola, Texas Instruments, Apple. And they said on here 20% is industrials. That's why it's probably not been doing so hot. Less people have been needing production because the economy's kind of sour. I'm less sold on this one in some type of short-term scenario, maybe like over the next year or so. For me, this would be actually something I'd be happy to dollar cost average into it, but this is something I would have to be holding for like a minimum of 2 to 3 years. So you're going to be dollar costing averaging it when we're kind of having this worse economy as the price continues to deteriorate, which will probably happen over the next few quarters. You know, you continue to buy and buy and buy, and once we come out of whatever recession we're in or whatever economic turmoil, this thing should do just wonderful things for you down the line. But mine is we'll get in while it's cheaper. That's the way I'd be looking at this right now. Because this thing has a lot of stuff in it, but as you can kind of see right here, if I zoom into it for you. Sorry guys, my nose is already messing up from being sick, but basic materials just a tad, consumer discretionary just a tad. That's enough. Consumer staples, good. Energy, not enough for me technically, but this is a different type of portfolio. Financials, 11%. Healthcare, 11%. Industrials, 20%. That right there is the thing that kind of spooks me a little bit right there. Other, don't know what that is just yet. Real estate, 2.6. That's fine for me. I don't like real estate right now. Technology, 7.8%. I like technology as always. Telecommunications, 2.1. Reasonable. And utilities, 6.5. I can live with it. But you know, as I kind of go through on here, I'm looking at Adobe, Kimberly, American Express. I mean, there's a lot of stuff like Old Dominion or Dominion. Yeah, see me, Freight, Norfolk Southern Corp. Ha ha ha. American Company. I mean, Chipotle, General Dynamics. I mean, they just got a whole bunch of shit in here. Apple, Keurig, Dr. Pepper. I mean, that's a lot of shit in here. The smallest it looks like is, oh, they sold off some. Maybe they're short. Oh, I think they're short. It's a hedge. Oh, okay. Yeah, but it looks like they're really heavy and Progressive. Progressive and ABBV, MasterCard, Hershey's, and Visa. I like Visa. I like MasterCard. I like Hershey's. I like ABBV. I like Progressive. They're all decent companies here. But, you know, this is something that you'd want to just buy and hold, but you're not gonna see some strong returns for a couple of years. So I'm more sold on the first one, the VFI, rather than this one. But dollar cost average this sucker for a long term, yeah, I can see it working out just fine. 11%. But for me, dollar cost averaging is something I'd prefer to do instead of actually buying in bulk, because I think this thing, because it's so hooked up to the economy like it is with industrials, if we hit a recession, this thing's going to be like at the 40s level. So you might get kind of ticked off if you buy right now and it goes back down, right? Like I think we talked about this last one a while ago. That gosh, why is it all like this? Give me a second here. PXD right here, right? This is a really good one. This one's been making me some good money for a while, but you can see how it's been making some new lows here, or lower lows, excuse me. Or it broke the higher lows, actually wouldn't make a new low here, but also making these lower highs here. You know, I can hold on to this for a while, and it might even come all the way back down here to 168. But do you really want to hold it? Do you want to buy now and hold it while it goes all the way back down here? Or do you want to just dollar cost average into it if you haven't bought it before, right? And then like play it around and hope for the bounce here, then the break that will occur later on, right? For me, you know, as far as the JP Morgan one, I would just dollar cost average into it slowly, and then take your money as it kind of comes down the next couple of years. Bitcoin's breaking back down again. See me, guys. Man, my nose is gonna kill me. I have a nasal thing to keep my nose clear, but I don't know what to deal with it. Yeah. And hey, Alex, I'm 27 after 24, and I'm like, where did the time go? And hey, Kane, hope you guys are doing well. Time does move fast in your 20s. I've known that. I've pretty much just been working all of my 20s, like just work, so I can relax in my 30s. All right, here's this. I'm like snorting right now as I talk to you guys, so I'm gonna be right back. I'm just gonna go run and grab my nasal thing so I can like breathe in front of you guys. I'll be back like count to a minute, count to 60. All right, I'm back. I put my nasal spray in. Now I have to see how this works out. There we go. Because I did want to stream for a little bit of time today. Oh, there. You want a treat? Come up. Say hi to everybody. All right, sorry. You can get up and you can come get it. All right. Let's go over here very fast. So, looks like Bitcoin's breaking down again, everybody. So let me change something up here very fast for us. 1, 2, 3, 4, 5, etc. Loki. Let's see. There we go. All right. There we go. Okay. And hey, God Candle, happy to see you back. But yeah, guys, looks like Bitcoin's breaking down. Let's kind of hop back over here to the daily chart. You can see a little bit more clear. I wonder how this is actually affecting some of those other plays that we've been talking about, like Ethereum. Let's get rid of all this other stuff that we were talking about. There we go. You're seeing Ethereum start to break down as well. So you might see Ethereum come back down here to $1,500 today. That could be a nice short to play. 4-hour chart. Yeah, Ethereum is making some new lows as well here, guys. That's not a good sign if you guys want to see crypto go up a little bit higher. What's going on over here? Let's go to the 15-minute chart so we can just kind of see what's been happening. Auto, yeah, a lot of volatility here as well. Matic is still doing okay, down, but still okay. Dogecoin's coming back down bit by bit. XRP is going higher of all things. That's interesting. Link is down. STMX is sideways. Oh, Shiba's down. Oh, Shiba's breaking down. Yeah, Shiba's breaking down. Everything's starting to make these moves here. So, not a good sign for the overall market, guys. Litecoin is still managing to hold, barely. Ethereum Classic broke down a few days ago, it looks like. Still coming down bit by bit. Solana coming back down towards support, but hasn't broken down just yet. Sand making new lows, or lower lows, excuse me. BNB is unch, it looks like. Doge on Mars is down after breaking down. Oh, that's an easy short, yeah. Gala, more sideways, it looks like. Oh, but no, Gala's down 5% for the day. Ouch. Yeah, ouch. UFO token coming back down as well. Actually, to support, hasn't broken down just yet. I mean, some of these things had just huge runs the last few months, though. Look at that. 151%. Yowza. XLM. Sushi. Yeah, it looks like the majority of stuff is trying to break down right now at this point, guys. So just be careful. FTM broke down a few days ago, it looks like. AVAX broke down a long time ago, but it also just broke down, looks like last week as well, or a couple days ago as well, excuse me. There we go. But yeah. Looks like we're going to give up this level of support here and just make our way back down here to maybe the low 21,000s. Around like 21,400 or so. Doesn't seem terrible, but you know, we got to watch out for any types of attacks that would really like drain the price of Bitcoin, where we're like, you know, you can see the price going down and down and down really fast in succession. There we go. Okay. One last nuke before 30K. I mean, I hope we can get to 30K right now. The overall market needs to have some good news from Jerome Powell, because he pretty much killed all the momentum. You see the NASDAQ right now, the NASDAQ starting to break down here. What is this, 50-minute chart? NASDAQ is starting to break down finally. The SPY is starting to continue to go down. I think we were just talking about Enphase Energy. How's this one working out? Okay, it did manage to break down a little bit more here, so it is coming down, so I hope your put's doing well, my man. But yeah, you're starting to see the market give a little bit more of a capitulation, because I think this Fed meeting is just not doing so hot. Like, hold on. I don't know if it's still up and running or not. No, Tom was running it. It looks like it's over now. But I think the market's probably just still digesting, perhaps, what he was saying. all of a sudden you're going to see a whole bunch of fund managers start freaking out. Like, I thought we were going to have rate cuts this year. What's happening? What's happening? Blah, 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 blah. There we go. But the fact that Bitcoin's breaking down is a good sign for anybody that wants to buy, up some stuff down the road. We got about an hour left on this 4-hour candle. I would say that you guys really want to see this thing close down below this level at the 4-hour if you guys want to be more confident about it coming back down all the way down here to the 21,372 level, okay? On the 1-hour chart, oh, we only have a minute left before we close down below it on the minute chart here. That could be interesting. Usually the 4 hours is a little bit more important to me. But you can see since we only have a minute left, there's a lot more activity popping up here, right? Just trying to stay above the support, and it's just not working out in our favor to the most part. Hopefully we get a big boost over the next minute or so, but let's go to the minute chart. Yeah. We want to see a boost here over the next 30 seconds or so. My puts are finally paying off. There you go. Takes a little bit of patience on these days, aren't they? My gosh. Let's right here. Anything else making some moves? No, not really. Oh, hey, Zachary. Oh, baby, let the cascade begin. We're about 30 seconds away from closing down below the 1-hour chart, but I'm surprised we're not seeing these larger moves. Like, what is that one? I can check for some liquidations. Doesn't seem to be much liquidations happening right now. There's a long, let's see. Thresholds. I think it's fine if we go over here very fast. I should probably just shrink this one down. How do I drag you away? No, don't connect to it. Just do something over there. Okay, there we go. Okay, that works. That works. These are liquidations right here. These are just trades going on. But the liquidations seem to be, there's a few of them. Binance Futures, Bitcoin. And there we go. Looks like we closed down below on the hourly chart for the first time. That's no, it's good. But let me see. Oh, no, we didn't. At least on this hourly chart. Oh, which one do I want to use, though? On the daily line, I guess we did. But let me go over here very fast. This one. Maybe we didn't. Okay, see, this is why you got to keep moving the charts around. 4-hour. See, the 4-hour here, I hate this because it's never the same thing. I wish like the trend lines would just stick to the whatever point is on there. I wonder if that's a setting on here. No, okay. But yeah, I'm always on the verge of a collapse here. I'd probably put it back on the daily ones though, just for now. Back to the 5. It looks like we're still trying to bounce off of this. This is freaking insane. I mean, let's go back over here very fast. Let me go over here to the SPY. Yeah, a little bit of reversal right there as well. Let me go over here to the SPY very fast. Okay, 4-hour moving average is having a little bit of a conversion here. Might be a decent place to have a scale out point. Let's see. Yeah, if I was to buy, I'd be buying a little bit lower than this though. Yeah, I'll be fine for now. 5-minute chart. There we go. All right. There you go. But you can definitely see the weakness popping up right now. Maddox's been holding a 4-hour order block pretty well during this chop, Matic is its own special thing. We used to say Matic is doing Matic things. If we go over here to that 4-hour chart very fast, we're still having these lower highs here overall, but we're starting to slow down pretty well. So yeah, it's been holding up pretty well. I mean, that next support level is really down here on $1.06, and we gave up the other ones a while ago. Weekly chart. Let's get rid of that breakdown that we saw. This thing is going to have to come back down eventually. I feel like it just has to come back down. Dogecoin coming back down. XRP having a little bit of a pop. I wonder if this is because XRP broke out, but it didn't break out. That was just the weekly chart. No, it just bounced off of support. Pretty much just waiting for a surge to push Bitcoin down pretty darn hard. Oh, geez, you can see the liquidation's coming out now. 1 minute. We can chill on the 1 minute chart for a little bit here, guys. Let me know if you guys have any questions, but otherwise, we can just chill and look at some news here. Put my leg up here. There we go. I'm sick, so I'm trying not to talk as much as I can. Well, I'm going to talk, but you know what I mean. Not talk at length. Let's go over here very fast. And we can go over what Jerome Powell said today. Hello. We can watch this video here. Hold on. There we go. All right. I'm going to give Loki heads.
Jay Powell in testimony before Congress will suggest that rates could go higher, get there faster, and stay there longer than anticipated. He says it is likely that they will go higher than anticipated if data indicate the Fed is prepared to increase the pace of rate hikes. He also says restoring price stability will require a restrictive policy stance for some time. The historical record, Powell warns against prematurely loosening policy. Quote, we will stay the course until the job is done. Goes on to say that decisions will be made meeting by meeting, and the full effects of tightening have yet to be felt in the economy. He talks about the recent data where he says the January data partly reversed the softening trends they'd seen late last year. This likely reflects, he said, unseasonably warm weather, but he suggests that even if you take out the warm weather, it still suggests inflation is running higher than expected. On inflation, Powell says the process of reducing it has a long way to go and is likely to be bumpy. More on inflation, he says it's moderated somewhat, but still well above target. He expects housing inflation to decline in the year ahead, but there's little sign of disinflation in the area that he continues to point out, which is core services ex-housing. On the economy, Powell says there will likely be a softening in the labor market this year. While wage gains have slowed, Powell says they have remained above levels consistent with the Fed's 2% inflation target. The U.S. economy slowed significantly last year. And as for consumer spending, it is rising this quarter at what he calls a solid pace. There's been some recent indicators that point to subdued growth in spending and production, but overall, he says the labor market remains extremely tight. So there it is, guys, the possibility of a higher rate, the possibility of getting there faster, and the idea of staying there for a long time. Back to
you. That's like that's a horrible thing for a lot of people out there, right? More rates. Higher rates so we get there faster, and then we stay up there longer. It's not what you want to see coming out of the Fed speaker, right, at all. I cashed out like a month ago, and the fact we're moving sideways was unnerving me. Listening to your analysis helped me steal my nerves. Dude, I'm happy about that. Sorry, every time I move my hand, Loki's like just wanting to play. But I mean, you know, the way I've always described it, Zach, is, you know, now in hindsight, you can see that you probably made the right decision by just scaling out a little bit. But like for me, like let's say, you know, I scaled off to really the last of my holds that I bought down here. I scaled them off like really around this $18,000 level, around here 21,000. And the last little bit, I kind of sold around here on 22,500. Then from there, I was doing a little bit more day trading. But, in hindsight, isn't it just better to buy down here, sell through up this part, and not have to worry about all this stuff because you've already made your money? Sometimes it's just why force yourself to worry? That's why I like to typically play breakouts and breakdowns, because there's less consolidation to be worrying about. On the other hand, here, I've been doing more of the signals. So, whenever I see a bearish, and I'm like, okay, well, maybe I can try to do a short-term short or some type of short here, like a longer-term play. But it has to be at a level of resistance, right? Short around here, it worked out very well. Long around here, it worked out very well, right? Don't long into resistance, but you can short coming out of resistance. Like this one didn't work out as well, but still, usually if you're playing these moves, you're going to be just fine. But when you have to see these sideways action, okay, I'm out. I made my money. I can just wait. A lot of times when it comes to investing, you're surprised about how much time you're waiting for the setup to actually play out the way you want it to, so you can actually make some money. But I mean, I think you did the right thing here in hindsight, of course. But even me in hindsight, selling the majority around like 18,000, 20,000. We went all the way up to 25,000. Did I sell too early? You bet it. You better believe it. But was I happy to just make some money when a lot of people didn't even get any part of that move? Yeah, I'm pretty happy I made a good amount of money off it. That's usually how I view the market, or my personal strategy. I don't want to hold anybody else, but my personal strategy. There are people out there on YouTube who do some crazy strategies, and they make like a few $100,000 in a day, but they also, some days they also lose a few $100,000. I don't want to do anything like that. It freaks me out too much. Then my nerves start to fry. And hey, God Candle, also I've checked out a few other people today, and such as yourself, most are expecting another leg down for our next volatility. Makes me think we're going to be doing the opposite. What do you call? I hope you're right about that. Part of me also just wants the market to go down so I can accumulate a little bit more here. But for me, it's more of, I believe the stock market's going down over the next week or so. So therefore, I believe Bitcoin's going down. Now, that next leg down may only bring us back down here to 21,334. I'm hoping that over this month, though, we'll probably have a retest of the $20,500 level. But again, that's mostly off of the NASDAQ coming back down, SPY coming back down here. Let me get rid of all this other crap. Weekly charts, right? This is me hoping we have a little bit more of a move down here. If Jerome Powell comes out for the Fed, and he is much more dovish like he was the last time during the Fed meeting, it's not going to happen like that. We're probably going to come back down just a little bit and have a really, really nice bounce. And then that bounce may take us as far as the SPY all the way back up here to like 431, something really crazy and unexpected. And then we got to wait even a longer time before we have that breakout. But if that happens with Bitcoin, of course, that means we're breaking at above the 50, and we have an opportunity to come all the way back up here to 25,000 to at least retest. And then from there, try to make a move up probably closer to what, like 28,000, perhaps $30,000. I'd probably say $28,000 or so, but the way Bitcoin kind of zooms off, maybe higher. But for me right now, I'd wait a little bit, because I think we're due for a pretty big swing move, but I think eventually that swing move is going to take us right back down. So like, maybe over the next few months, I could see us having a big move, another big move like this. But I would say it's most likely going to happen when the price of Bitcoin is a lot lower. It's like perhaps we come, perhaps we come all the way back down here to like, let's say around $19,000, $18,000. Then from there, we have a big boost that takes us all the way back up here to 23,000. And then we start coming back down, and we make some type of new, pennant, some new consolidation for the longer term traders out there. But that's just a guess at this point. But something that you said right there about looking at a whole bunch of other people, I'm usually the contrarian, which is always kind of interesting as far as other YouTubers out there. But I need to start watching more YouTubers out there. I have a personal friend, Tom. He has the Tom Crown channel. I should talk to him more about his views. Or watch more of his content. I don't need to watch his content. I can literally just ask him. I can message him on Discord or Telegram. But yeah, I should try to see what he thinks about all this type of stuff. Because most of the people that I talk to, they're all bull market ahead. We're not even going to retest the October lows for the stock market. We're not even going to retest the lows for 2022 as far as Bitcoin's concerned. I don't agree with both of those sentiments, so I'm just kind of here wandering until we actually I'm proven right or I'm proven wrong. And proven wrong will take some time. No reason other than being a contrarian. Yes, I want to accumulate more. Yeah, what do you call contrarians are usually pretty, I mean, a lot of times a contrarian isn't a bad thing. I mean, there's like a whole branch of new influencers out there these days that are contrarians against what's his name? Contrarians against what's that guy's name? He's wrong about a lot of stuff these days. I'm thinking of Bill Maher, but it's not Bill Maher. What's that guy's name? Jim Cramer. Okay, Jim Cramer. Yeah, Jim Cramer. Yikes. There's a whole group of people that says, hey, he sucks at investing or giving you people like technical advice. So I think he's okay at fundamentals, honestly. But when it comes to technicals, that guy tells people to buy at the wrong time every time. But yeah, Kramer, yeah. There's a whole contrarian view around that guy. Okay, what do you want? You want to play fetch? He's shredding this ball here, and it was like such a nice ball. But now this ball has a ponytail. Kramer, yeah, there you go. Thanks, Joseph. My gosh. And always, God kind of always happy to help you guys out. But my gosh, guys, Bitcoin's definitely taking its time as far as this breakdown is concerned. How's the whole market looking over the last 24 hours? Everything's down just a little bit here. XRP's up, ADA's down. Everything's down just a little bit. Solana seems to be down quite a bit. Let's see. Oh, how's Binance Coin doing with the market cap issue? Dude, BNB is still like just crashing down. I don't know what happens if this thing hits zero. BNB just back over here in November as the FTX saga was going on and everybody was pumping the money in, not pumping, but throwing the money into BNB tokens. Look at this. I mean, like it's gone from $23 billion market cap all the way down here to currently around like, what is this? 8.4 billion. What happens when this hits zero? I really don't know. Like, look at the last month. Look at that. It's insane. Over the last month, we've gone from 16 billion all the way to 8. It's like lost half its market cap in the last 30 days. I don't know. I feel bad about Binance today. Yeah, I'd agree with you there. I don't know what happens, guys, when this hits zero. I just really don't know. Or whatever that low point is going to be. 3 months, year to date, all. I mean, that is not a chart that looks good for any market. Now, this is the stablecoin. This is not BNB token, but that's stablecoin. But when that stablecoin hits zero, I don't know what the heck happens to Binance. I really don't know. And hey, God, Kendall, oh boy, every time I see him talked about on Reddit is not good. No, because they have charts telling people like he'll say we're in a bull market, and all of a sudden the market just goes down from there. Or it's time to sell, and then all of a sudden the market rallies off of that, right? He's a very entertaining individual for certain segments of the trading community. I've never been entertained by him, but I've never been one. Again, you guys know me. I'm pretty much more quiet and reserved. I'm loud because I'm talking into a microphone, but I'm usually like, I don't know, I have ADHD, severe ADHD. I usually like my peace and quiet. My dog here is my comfort animal. So he can play with me. He forces me to go outside. He forces me to go out and enjoy life, right? But Jim Cramer is like why I don't go outside, because there's like noisy, loud things that don't make sense that are often lies, just waiting for you as soon as you step outside of your door, right? Don't parkour me. Dude, this dog likes to parkour where he jumps on you and like just tries to push off so he can go flying. He used to do it a lot when he was a puppy, but I guess he's like a year and a half now. Oh, look, give me the ball. Fine, he's not going to give it to me. He doesn't get to have the ball thrown at him. Away from him. And hey, Swin, Powell already talked this morning. He started talking very early this morning. It's already been completed at this point. If you want to recap, I would go over here to CNBC and just look at this first article on the homepage. The big news here was he said Fed Chair Powell says interest rates are likely to be higher than I previously anticipated, which means more rate hikes which means a higher chance of us going into a recession, which means a lot of people are going to be very upset because, as you guys know, off of these last few months, last month, I would say, the stock market has rallied up a lot because everybody was thinking that, hey, we're going to be ending the rate hikes pretty soon. Everything's going to be golden. Let's go full steam ahead. At this point, it looks like that's not going to happen. And it really messes up everything. Because look, we're most likely going to have a golden cross here between the 20-week moving average and the 50-week moving average over the next few weeks, okay? Months or so, okay? Historically, when we have those golden crosses between the 20 and the 50 here, right? It usually signals the end of a bear market, right? 2008, no inflation, right? No inflation. Over here in 2001, usually signals the end of the bear market. Now, what happens? Like it's throwing everything into whack, and it's really messing up everything. And when everything's thrown out of whack, like there are some huge shakeouts when that happens. Like we're usually not out of whack. Like will we have capitulation moments like we did back over here? You know, like financial crisis. Sure, we'll have bad times like that. Will we have really bad times when a bubble like this? Yeah, we'll have bad times. But when the signals are like so out of whack like this, like nobody knows what to do, and there's a lot of investors out there who just flat out lose money like crazy. So I don't exactly know how this is going to play out. I really don't. I'm more bearish, of course, but like the fact that there's so many converging signs because the market thought one thing, all of a sudden reality is starting to hit them. The technicals are still the technicals, right? So it's almost like I'm gonna have to, like, for the next quarter two, it's going to be all about going against every technical out there because right now the technicals are bearish, but I can see how there's a scenario for them to be more bullish, right? Like that was this to the NASDAQ, but if you go over here to the SPY weekly charts, right? We're about to have a golden cross right here as well, a little bit sooner. On the other hand here, guess what? I can see the 200 here, even with that golden cross, I know that the 50-week moving average is going to cross down below this one, and that's going to be a very bad sign because when we hit the 50-week moving averages below the 200 weekly moving averages, right? Yuckaroo, yuckaroo, yuckaroo. Over here as well, yuckaroo, yuckaroo, yuckaroo. Right? So there's just so many weird freaking things happening right now, and it's so confusing. Which is kind of, this sucks because there's so many new investors that hopped on board the crypto markets, the stock market, all trying to learn how to invest back in 2020, 2021 as the market was kind of going boom, boom, boom up to the moon. But what ended up happening now is like, we're just seeing like everything that a lot of you guys have learned from me, from other YouTubers, from just the courses you guys may have bought and whatever, it's all going to be thrown into chaos. And I'm going to try my best to kind of figure out all this chaos. But it's just so wild because we're not used to seeing something like this, never. And so like imagine all the computer programs that run off of all this shit, you know, like technicals. What are they gonna do when they start seeing all these converging signals? Okay, here, all right, go fetch. But yeah, a little bit of a rant there, but oh my gosh, guys, it's gonna be absolutely wild. Like I don't even know how this ends up turning out, but I would still say bearish. But you can see how there's so many different conflicting signs here. And then on top of that, you know, for like maybe quarter two, we're all going to be about fundamentals and what the economy is talking about. But who wants to talk about fundamentals? It's like the most boring thing to talk about. Like, I am generally curious to see what happens with all these influencers out there on YouTube when they have to try to tell people what's going on the weekly charts versus the monthly charts versus the daily charts, because they're all going to be showing you guys completely different things. You trying to fight with me? Let go. I'm not trying to wrestle. Dude, this dog. Yeah, but what do you call? A little bit of a rant, but yeah, it's just gonna be freaking wild, guys. It's just gonna be a wild time. Okay. Give me the ball. Give me the ball. Come on, over here. Over here. You can say hi to everybody before you play fetch. All right. Is BNB price indicative of the rumor suggesting Binance next collapse? Okay, so we were talking about Binance USD. It's ranked number 10 right now. If we're talking about BNB, at this point, it's still holding up strong. Like here, you see how the daily, the market cap on the other one was going down. This one's working out just fine. Like year to date, BNB's been kind of going more sideways, but still up a little bit. To me, BNB is something I'd probably not want to be holding anymore, to be frank. I don't know what happens when their stable coin gets like eviscerated because it has no more market cap, but I just can't imagine it being something very, very good, right? Maybe they have some type of plan out there, but I haven't been hearing about it from CZ or anybody else on Twitter associated with the Binance, company. And so I just honestly don't know how that works out, because if there's not any new BNB being minted, or by the Binance stablecoin being minted, I just don't. I don't know if they have any loans or they have any collateral associated with their actual stablecoin. So sometimes what these crypto exchanges will do, and since CZ and Binance is very private about their finances, it's not a red flag for me technically, but it's just something that, like, hey, I don't know. So if I don't know, that's usually, I'll just assume it's for the worst, right? How do I explain this? Let's say I have $1 million of a stable coin, and I take out a loan using that stable coin as collateral, right? Well, if that stable coin for whatever reason starts to go down in value, or perceived value, if you get what I'm saying, the people that I have gotten a loan from, they may ask that I start paying more for the right to have that loan, or they may be asking for, they might try to just ask, say, hey, we need to change that collateral over to something else because we don't have faith in this type of collateral investment, right? So it's a weird way to say it, I know, but it concerns me a little bit, so I wouldn't really be doing too much on Binance right now. I'll try to find some more exchanges for you guys. Right now, the one I know is BingX. BitGet, if you guys are outside the state, has still been working very well for a lot of you guys. Bybit seems to be doing okay, although I think Bybit had some news over the past few days or something. I'm not entirely sure. But yeah, as far as BNB, I would not hold those stablecoin at all right now. I just would not hold it. I wouldn't hold it at all. As far as the BNB that kind of goes up and down in value, their token, I mean, sure, I would buy some. I'm sorry, I would not buy some. I was thinking of another token for another exchange that hasn't launched yet, but would I trade it? Sure. Would I want to though? Not really. There's better things to trade. Ethereum is way better to trade, in my opinion. Hey, God Candle, if you don't mind me asking, how do you use liquidation heat maps? As far as liquidation heat maps, I mean, I think you're probably talking about what we were just looking at here at the AARG, perhaps. Oh, I don't know if it actually has the heat map on here on defaulted. Does it have it? No. Basically the way I've always used them. Oh, now it's gonna look all weird because I had it moved. Hold on. To me, they're basically levels of support and resistance. But when you see a lot of previous buyers on there, I almost try to use it as a similar way as if you would be looking at order blocks. But on the other hand, you're just looking for, hey, if you start to see some large liquidations here, that means the people that had bought and went long or went short, whatever, they're losing their trade and their position is being flushed out. Therefore, it's going to put a lot of weight or a lot of pressure on whatever level is the support or resistance for that particular time, right? So if I see a lot of heat coming down on on a level of support, and we're seeing some very large liquidations, perhaps could be even after we've broken down. To me, that signifies that, hey, I don't need to be trading at all right now except for shorting, because all those liquidations, it's going to punish the market as more, like, those liquidations cause more liquidations, which cause more liquidations, which is why sometimes you see Bitcoin, like, I mean, this is a 10-second chart, but you can see it just coming down hard and you see it boom, and all of a sudden you see that flush movement on a chart. That's usually what I'm looking for when I'm trading. Usually a really good exit point if you're trading live, but you got to be like really on the right on the keyboard with your hotkeys ready to go. That's right here. Yeah, so far so good. But guys, I'm gonna call it a day for this stream. I'll be hopping on back on my like 5-6 hours or so. But Bitcoin seems to be going down slowly, very, very, very slowly. So slowly I don't want to keep streaming because my voice is starting to hurt because I'm sick. But for all of you guys out there, I'm still bearish on crypto for the next few days. You can see the SPY starting to slow down in volume just a little bit here. NASDAQ slowing back down a little bit as well as far as the falling. but still breaking down. I think it's just hitting this support level right over here. Yeah, looking for a small reversal. But overall, guys, have some stop losses. Day trading seems to be ruling right now, not so much swing trading. If you guys want to look for some larger moves, I would just start holding up some short positions. If we manage to break down, and I would only play them back down here to around 21,600 or 21,400. I wouldn't try to play them all the way back down here to the next level of support, which is around 20,400. Okay. Have a good rest of your day, everybody, and I'll see you guys just